Welcome to Quantum Finance. My name is Parker, and this is our weekly recap for the week ending September 22nd. So, in this video, we'll take a look at the charts, we'll go over some news and data from this week, and then we'll look at the economic calendar for next week. So, starting here with the stock market with the SPY ETF, as you can see, monster red week this week. This is a super bearish candle breaking down through these last weeks, or from these lows back here from August and that weekly midline, these highs back here from last August. So huge support breaks coming in this week as the Fed did decide to pause interest rate hikes. As you can see, this big red candle here on Wednesday, which is when we get the Federal Reserve interest rate decision. And you can see Thursday getting that big breakdown of all the key levels and then continuation to the downside today. This is really bearish. I would maybe expect the next level, like our target, to be down here towards these previous highs back here from from January. As you can see, these highs are right here, and it kind of lines up with this lower extreme down here on the weekly chart. As you can see, this kind of structured resistance up here and right here from April and January. So I would maybe expect somewhere down towards this 415 level, maybe a little higher up here towards 420, this kind of like zone here, because as the weeks go on, this lower extreme will continue upwards. So now we can take a look at the debt market with the U.S. 10-year yield. The U.S. 10-year yield, big green week this week, breaking above these previous highs back here from last October. Major breakout this week here in the 10-year yield. As you can see, pulling back today, but I do want to zoom out here on the monthly chart. So as you can see here, this is the highest the 10-year bond yields have been going back to 2007. So major breakout this week here in bond yields. Looking at the dollar, another green week here in the dollar. What's new, right? As you can see, approaching these highs back here from March, sitting up here at 105.83. We haven't had a red week here in the dollar since July. So just the dollar continuing its parabolic move to the upside. Turning to cryptocurrencies, currently red right here on Bitcoin, finding resistance here at that weekly midline. As you can see here on the daily chart, getting resistance here on Tuesday at this upper extreme and then pulling back yesterday and today. Bitcoin and cryptocurrencies being relatively strong compared to the overall stock market. As you can see, we have been green most of the week where the stock market had that massive drop. Turning to XRP, green week here in XRP. If you remember last week's video, I did say this kind of looked like a bottoming candle with this hammer tail. Nice to see some green here in XRP. It has really been quite a while. Sitting right now at 51 cents, as you can see, holding this daily midline and these previous highs back here from last week as support. So it would be nice to see our bullish reversal continue up. Turning to oil, red week here in oil. Finally getting a pullback after running into major resistance up here at this like 93 level. As you can see, being major resistance back here last November, October, and August. So oil running into a major resistance level here, as you can see, topping out here on Tuesday and pulling back. Turning to gold, green week here in gold, we need it to close above this weekly midline here in order to get back bullish. As you can see, trying to get its bullish reversal here. I would say a weekly close above this trend line and that midline would be pretty bullish here on gold. Turning to silver, another green week here in silver as well after bottoming out down here at that lower extreme last week, sitting right there at that daily midline, starting to get pretty squeezed here on the weekly chart. So, over the next couple months towards the new year, I would maybe expect some type of larger breakout here in silver. As you can see, this kind of consolidation pattern that we are forming here in silver, this kind of wedge pattern here. So yeah, now we can look at some news from this week and some data. These are the job opening charts. As you can see, job openings collapsing to the downside. We also have the Pentagon deciding to exempt Ukraine operations from a potential shutdown if lawmakers can't agree on a deal by the end of the month. So if the U.S. government shuts down and we stop paying employees, we're still going to print money to Ukraine. Yeah, you take that with however you want. We also have the U.S. announcing another $325 million in weapons to Ukraine. And we also have here the average interest rate on a 30-year mortgage rising to 7.59%, which is the highest level since December of 2000. With interest rate cuts no longer expected until September of next year, it is likely we see 8% mortgage rates soon. We also had the Federal Reserve this week pause on rate hikes, keeping the Fed funds rate at 5.25 to 5.5%. The Bank of England did pause as well, sitting here at 5.25%. We also had the national debt hit $33 trillion for the first time this week, 11.5 trillion higher than where it was 5 years ago. We also have Elon Musk, SpaceX suing the U.S. government. But we also had Elon Musk, Neuralink, getting approval to implant brain chips into humans. As you can see, them just taking a chunk out of your skull and implanting a device. We also had a glitch at the beginning of this week where the 2-year treasury had a massive God candle, but it did come out to just be a glitch, and they did come back down and fix that. This is a chart showing corporate profit margins jumping to the highest level in 73 years. And we also had some news at the beginning of this week that a U.S. military F-35 stealth fighter went missing. The pilot apparently did eject, and the plane was in autopilot, so it kept flying. But they did end up finding it in one of the Carolinas somewhere. So that's just kind of like an interesting story that I have never heard of. So we can look at the economic calendar for next week. So it looks like Tuesday we get building permits, consumer confidence, and new home sales. Wednesday we get core durable good orders, crude oil inventories. Thursday we get GDP, initial jobs claims, pending home sales, and we get the Fed chair speaking. And Friday we get PCE price index month over month and year over year. So yeah, that'll do it for the video. Appreciate y'all watching, and I will talk to y'all later.